the Placid S requests. We're looking at the VeChain price action here, and I've just been asked by a member of the live audience if the prices are about to retrace from here. There's a couple of interesting points that we can easily make about this one. I want to point out just, I think it's fairly obvious. I don't know if it's obvious to everybody looking at this chart right now, but what is this area? I mean, what does it look like? It is really quite obvious. I think every human being out there should be able to draw a wee line connecting up that dot like that there to that there to that there, that there in their heads and see something like that. Then they should be able to look towards these sorts of low areas and connect up these lines and see something like that. Then they could maybe think to themselves, well, that's a bit much if it's a bit greedy target. Let's just call it this area instead and say that we've got a consolidation phase on the go here. Let's tie these together so it looks more like what you'd see in a typical chart. And then suddenly you're thinking to yourself, wait a minute, have we got a triangle on the go just in here? Is this possible? Could we actually be looking at this phase of price action along these sorts of lines? Well, we could, absolutely. I'm not actually even going to bother drawing out the measured targets from that. I think that sort of stuff is actually constitutes clickbait when it comes to YouTube. It's actually kind of bullshit, if I'm perfectly honest with you, in most instances where you see it on the YouTube, because we've already got the targets drawn in here up above. It's quite obvious, and I've already got them there. So I'm not going to just flatter to deceive or whatever with any of that sort of stuff. Instead, I'll just talk about this from a simple horizontal basis. The next target with regards to VeChain is 27 cents. Yes, that was the previous high. If we're looking up the way, the next target up in terms of profits into the higher areas is 37 cents. Are any of you out there trading this in a way that actually needs to have short-term price targets? If you are, then cool. But regardless, long-term or short-term, you're both going to want to be aware of the key areas below. And now, obviously, and it's so obvious, you're talking 18 cents, 18.5 cents. It's so obvious that's where that area would be. Now, what's after that? Well, it's actually 17 cents as well. It's so obvious as well. There's this white line on here. By the way, that's a 200 simple period moving average. This is a 4-hour time frame, and that's where that comes in at. We're just consolidating here at the minute. Is it about to retrace? Was the question. Well, to answer your question, buddy, and it's not that difficult to answer really. We have already retraced. Now, what you have to say when you talk about retraces, you've got a trend. Where's your obvious point? Now, looking back down the way, out of all of the lows that we've had recently, what would be the one that you would draw your Fibonacci in from? Well, there's actually a few. Now, I got asked to talk about this recently. So how do you discover where you would draw your Fibonacci retracement tool in from? Because most people use it wrong. Most people, including people who've got fib in their name on YouTube, by the way, including them, and have been guests on Tony Vase's show, including them, use it wrong so often. So how would you be able to determine where the lows are? Well, what do you think? What do you think now? What do you think would be the lows? I mean, looking here at this area where it's so significantly, obviously, in terms of what we have in front of us and the screen that we're looking at right now, this is obviously the significant low. This is obviously it, right? This is the lowest one. It's where we saw the markets turn around from. Then you've got this area here, which is the lowest sort of impulse low retracement point from the initial change of trend. So the prices were 0.8 cents, like less than a cent down there, and they went all the way up to these heady highs of 1.8 cents and then boomed back down the way but managed to maintain it at 1. This is obviously the next most significant area. Now, what about this area in between then? And let me just grab this arrow. Let me just grab this arrow here and say, what about this area in between that I pointed at next? What about this one? Is this significant? How much more significant is it compared to this one? This one or this one? Which one's more significant? Obviously none of them. Obviously it's none of them. Obviously it's not any of them are the significant area in terms of this overall trend, right? So you could delete that. You could obviously delete that. Then what about this one? Well, that's the midpoint, right? But let's just skip past that for now. What about this area just here? Is that significant? Didn't touch the 200, went just sideways just there. It's obviously not significant. Remove that as well. So we've got 3 options here towards the downside. Obviously this is our high. So if we're looking at the overall trend, then where are we going to draw in our Fibonacci from? This point, or this point. Well, let me just compare those first 2 initial points first off and say that, a Fibonacci retracement is only valid when it goes past the 236. So let me be very clear here. There's your first one. The 236 comes in here at 12 13 12 13 12 12.3, then right, so leave that in. Now of course it's the bottom point that's changing here. The next one, your 236 comes in there at 13.2. So you're kind of, there is a difference between the two, but it's hardly anything, and all of these things operate as zones anyway. So really, where you draw your Fibonacci in from is almost a moot point between these two lows until such times as you've taken that out. How it changes for the next period thereafter between these two lows is significant, of course, right? Because the 618 golden pocket's down here at 3 cents on this one, and on this one the 618 golden pocket's down there. It's still at 3 cents, but it's percentage wise is a big enough difference in terms of where you'd be taking your profit at overall, but that's maybe when you start to think about it, but you're not even thinking about it till you've gone past that point. Anyway, with regards to all of this, I would say that if what's quite obvious from this whole discussion building up to this point here with VeChain is that we had our retracement already, buddy. We had it already. When we came down to here, where did we go down to? The 236 Fibonacci. Is that a coincidence? No, it's not. We've done this a billion times, right? So was that a coincidence? No, it's not. So that's where we retraced down to. So we've had a retracement. Now we've come back up the way. So how are we doing within the formation overall here? And how does this particular 236 zone interact with our other areas? Well, overall, probably wise to be thinking about, where is the 618 of this? Where is this a 618 from? And has it got any relationship to where we drew that arrow in at before? Let's just draw in the arrow. Let's just draw in the Fibonacci retracement and see, okay, the 618 is quite low here compared to this. This is where the 382 is. That's interesting to see. And that's obviously because this is the midpoint. We're miles away from it, miles away from it, miles away. So, where are we going to get that? Well, it's from this last little impulse up the way. It's almost unnoticeable. I did have an arrow pointing there, I think, before I deleted them all. But anyway, it's from this sort of last impulse before we came up. And you can see we went down as far as the 618. Pretty much with this move down the way, we came down to our zone there, depending on how you kind of think about this one. So so that's obviously where we did this retracement from. And are we back above the 236 yet? No, we're not yet. We're not yet, right? Which means you've now got your levels, okay? So then the last thing is to look at between our actual retracement down the way, see that the target is there. And this is everything I said at the start of the show here anyway, displayed out for us. If we drop down the way, I'm looking towards that 17 area, of course. If we take out 20 cents, then great, because the next target is 27. That's, of course, more than 20% up the way. And the next target after that's 38. You're talking about a huge increase, a huge increase in prices there to get up. So your move would be taking you up, what's that, 77%. So that's huge. It could completely rip up the way if we take out that target. Now, we'd have to take out that target and sustain it, and also take out various targets in between. I think it's unrealistic to be looking beyond 27 in the meantime for this, because obviously to get to 37, you buy jingles, you go buy 27 on the way. But then looking down the way, if we do break down past the 200 simple in there at 17.2, I'm clearly going down to 13. Again, big moves down the way as well in terms of the profit taking that could be happening for you there on that one. Are we about to bust out of this? Well, not necessarily. It's jumping back down towards the 1 hour time frame and showing us that that's our high. This is where we need to get above. We could easily be going down towards this zone if we don't. There's our previous low. There's our high. Is that higher than our previous high? Well, it ever so slightly is. Is this higher than our previous low? Well, it ever so slightly is. So you could maybe make the case this is trending. So then, is it got divergence on the go? Yes, it did. It pulled down between these two highs. It doesn't. No, it does. It's got hidden bearish divergence. Hidden bearish divergence right here after a death cross. Overall on this one, I'm not feeling good. I wouldn't bother. In fact, if I was to do either of them, I'd short this from here down with a perspective of taking profit at 17, with taking half my profit off the table at 18.5, with the idea that if it actually goes against me, I could just flip reverse and take a profit along towards the top side, and I wouldn't be hanging on to positions down past that area there. So that's what's actually happening with the technical analysis on this one. No doubt you'll have seen somebody out there in the world say it's about to pop, and well, they're wrong. It could pop, it absolutely could, but if you wanted to trade this with any degree of sort of risk management and actually making money off of it and being consistently profitable over time, across time, then, well, you would immediately move your stop loss into profit if we do go up. If we go up from here, then you immediately move your stop loss into 20 cents sort of area, right? Immediately. You don't hang around. We're at 20 cents at the minute, in fact. We're at 20 cents at the minute. Just kind of look at this here. This is obviously very, very short term. I'm kind of bored of that, in fact. So I'm moving on. Not even going to finish making that point.